All right. So you're thinking about opening a restaurant in the UAE.
That's exciting.
It is exciting.
Yeah.
And of course, with any big move like that,
Yeah.
you want to make sure you really understand like the lay of the land, and especially when it comes to things like taxes.
Absolutely.
So that's what we're going to dive into today.
Yeah, let's break it down.
We've got this great in-depth article from Menuviel.
Okay.
It's called "What Taxes Do Restaurants Pay in UAE? Complete Guide and Rates."
Sounds thorough.
It is. It's very thorough.
Good.
We're going to break it all down for you so you know exactly what to expect on that front.
The UAE has a reputation for being very business friendly.
Right.
And it's true, there is no personal income tax, which is fantastic.
Okay.
But when it comes to restaurants specifically, there are definitely some things to be aware of.
So no income tax on like your personal earnings?
Right.
But what about the restaurant itself?
Mm-hmm.
Like as a business, what kind of taxes are we looking at?
Yeah, so let's talk about the ones that you're going to deal with almost every day as a restaurant owner.
Okay.
First up, you have VAT, value-added tax,
Okay.
which is a standard 5% on most of your sales.
Mm-hmm.
So whether it's dine-in, takeaway, you name it,
Okay.
you're going to be dealing with VAT.
Got it.
And then you have municipality taxes, which vary from emirate to emirate.
Interesting.
And those cover things like your health inspections, waste management.
So where you are in the UAE actually affects those municipality taxes.
Exactly. Each emirate kind of has its own set of regulations and fees.
Okay.
So, for example, Dubai might have higher fees for outdoor seating permits.
Okay.
Because there's high demand for that there.
Makes sense.
Whereas another emirate might have a bigger focus on waste management because of environmental initiatives.
Got it.
So it really depends on where you are.
So location is something to think about strategically.
Absolutely.
Okay.
Yeah.
So VAT 5% across the board seems pretty straightforward.
Yeah, it is a pretty straightforward concept.
Okay.
But there is a little bit more to it.
Okay.
You need to register for VAT if your annual revenue exceeds AED 375,000.
Okay.
Now, even if you're below that,
Yeah.
voluntary registration might actually be a smart move.
Why would someone voluntarily register for VAT?
I know it sounds a little counterintuitive.
It does.
Right.
Yeah.
But think about it when you're VAT registered.
Okay.
You can reclaim the VAT that you've paid on your expenses.
Interesting.
So all of your ingredients, your equipment,
Okay.
your utilities, rent all of that.
You can reclaim the VAT.
You can reclaim that VAT.
Okay, so that can offset.
Potentially a big chunk of your costs.
I see. I
Yeah.
hadn't thought about it that way.
Yeah, and plus it makes you look more legitimate.
Right.
Right.
To potential investors or suppliers.
Exactly. It shows that you're serious about, operating within the system,
Okay.
understanding the financial side of things.
Makes you look professional.
Absolutely.
Okay, so how does VAT filing work? Is it a big headache?
It's definitely manageable,
Okay.
especially if you have the right tools.
Okay.
But you do need to keep very detailed records of all your sales and expenses. Good accounting software can be a lifesaver here.
Okay.
And then basically you calculate the VAT that you've collected versus the VAT that you can reclaim. You file your return online through the Federal Tax Authority portal.
Okay.
And then you make your payment by the deadline.
Okay, so organization is key here.
Very important.
Got it. Are there any common mistakes
Oh, yeah.
that people make when it comes to VAT?
Incorrect calculations are a big one, especially if you're doing things manually. Missing deadlines can lead to penalties.
Right.
So setting reminders is crucial.
Right.
And then inaccurate record keeping can really come back to bite you during an audit.
So again, those detailed records that we talked about.
Yeah.
Okay, good to know.
Yeah.
Besides VAT and municipality taxes,
Yeah.
what else is on the radar for restaurant owners in the UAE?
Well, there's a relatively new one that's been making headlines.
Okay.
Corporate income tax.
Interesting.
Yeah. It's currently set at 9% on net profits above a certain threshold.
Okay.
So smaller restaurants might be exempt.
Okay. Corporate income tax. How does that work? Do I need to be a tax expert to figure that out?
No, not necessarily.
Okay.
The key is understanding what is considered taxable income
Okay.
versus non-taxable income.
Okay.
So, for example, the revenue that you make from your food and beverage sales, that's taxable.
Okay.
But let's say you get a government grant
Okay.
or a subsidy, that might be exempt.
Got it.
So it can get a little complex.
Yeah.
So if you're dealing with higher revenue or you're unsure about certain types of income, it's always a good idea to consult with a tax advisor.
Okay. So if things start to get a little bit complicated, that's when we might want to call an expert. Okay. Makes sense.
Yeah.
We've talked about VAT, municipality taxes, and this corporate income tax. Anything else we should be aware of?
Well, there are a few additional fees that might come into play.
Oh, wow.
Things like service charges, which are common practice in many restaurants, especially upscale ones.
Yeah.
And then customs duties.
Customs duties.
Yeah.
Tell me more about that.
So if you're importing ingredients or equipment.
Okay, so that depends on what I'm importing and from where.
Exactly.
Okay.
The rates typically range from 5% to 10%.
Okay.
But there are exemptions for certain ingredients.
Got it.
You'll need the proper documentation.
Okay.
Invoices, import permits.
Yeah.
To clear customs smoothly.
So organization is key there too.
Absolutely.
Got
It can definitely get tricky, especially if you're sourcing some unique ingredient.
But if you have something really specific.
Exactly.
Okay.
And on top of that, it's crucial to factor in things like the tourism Durham fee.
Okay.
Especially if your restaurant is within a hotel.
Yeah.
So that's usually applied to accommodations.
Okay.
But it can indirectly affect your costs.
Interesting.
If you're managing in-house dining services.
I see.
Yeah.
So this is a lot to keep track of.
It is.
Do you have any tips for staying on top of it all?
Yeah.
And maybe even minimizing those tax liabilities legally?
Absolutely. Strategic tax planning is essential for any restaurant business.
Okay.
First and foremost, make sure you're claiming all the deductions that you're entitled to.
Okay.
So that includes expenses like ingredients, equipment, utilities, anything directly related to your operations.
So those records that we talked about earlier come in handy here.
Very important.
Okay.
Investing in staff training is another smart move.
Okay.
Because those costs can sometimes be written off.
Interesting.
Which reduces your taxable income.
So investing in my team can have tax benefits.
It can.
That's good to know.
Yeah. And then there's optimizing depreciation.
Right.
So let's say you buy a AED 50,000 oven.
Okay.
Instead of expensing all of that at once. Yeah.
Depreciation lets you spread the cost over its lifespan.
I see.
Which reduces your taxable income each year.
So it's like getting a little tax break each year as my equipment gets older.
Exactly.
Smart.
Yeah.
Yeah.
And don't underestimate the power of technology.
Okay.
Good accounting software that integrates with your POS system can really automate a lot of the tracking and calculations and even VAT reporting.
So I'm not like manually inputting every transaction and risking mistakes.
Exactly. Minimizes errors,
Makes sense.
headaches, and then document management systems
are
great for keeping all your invoices, your receipts, tax records organized.
Yeah, so that peace of mind is really valuable.
Absolutely.
Especially if I get audited.
Exactly. And it simplifies compliance.
So by bracing technology, we can kind of streamline that whole tax process and then focus on, the
fun stuff.
The actual running the restaurant.
Exactly.
Okay, now let's talk about some pitfalls.
What are the things that trip people up?
VAT filing errors are unfortunately quite frequent.
Okay.
And it could be anything from incorrect calculations to inaccurate records to missing deadlines altogether.
Right. So those detailed records that we talked about.
Super important.
Essential.
Yeah.
Okay. Anything else we can do to minimize risk?
Absolutely. Double checking your VAT calculations is always a good idea, even if you're using software.
Good point.
And setting reminders for filing deadlines can save you a lot of stress and potential penalties.
Good reminders. Okay.
Yeah.
Speaking of penalties, what happens if we slip up? What are the consequences?
Well, late filing fines are pretty common.
Okay.
And if you submit inaccurate returns, especially if it results in underpayment, you could be facing some hefty fines.
Okay. So being proactive, staying on top of things is the way to go.
Definitely.
But at what point should a restaurant owner consider bringing in a tax consultant?
That's a great question. While not every restaurant needs a dedicated tax advisor right from the start, there are certain scenarios where it can be incredibly beneficial.
What are some of those scenarios?
Well, if your revenue is steadily increasing and your tax filings are becoming more and more complex, it might be a good time to seek some professional help.
Makes sense.
Also, if you start dealing with new tax types, like those customs duties that we discussed, a tax advisor can help you navigate those unfamiliar waters and ensure that you're staying compliant.
Okay, so basically, if I'm feeling out of my depth with the tax side of things, probably a good idea to call an expert.
Exactly.
Makes sense.
They can help you stay organized, minimize your liabilities legally, and just give you that peace of mind so you can focus on the culinary side of things.
Speaking of finding the right tax advisor, what should restaurant owners be looking for? What are some of the key qualities?
Industry expertise is crucial. You want someone who understands the nuances of VAT on food services, customs duties on imported ingredients, and those municipality fees specific to your emirate.
So it's not just like a general tax accountant.
Exactly. You really want someone who gets the restaurant world.
Yeah, someone who speaks my language.
Right.
Okay.
You also want to check their track record and references. You know, have they successfully helped other restaurants navigate tax compliance and planning?
So word-of-mouth referrals could be really valuable.
Absolutely.
Find someone you can trust.
Yeah. And don't underestimate the importance of clear communication and accessibility. You want an advisor who can explain things in a way that you understand, who is responsive to your questions, and who provides ongoing support. Especially as deadlines approach. Or if you're facing an audit.
So it's about building a relationship.
Absolutely. You want someone who's in your corner, helping you navigate the complexities of the UAE's tax system so you can focus on what you do best. Serving up delicious food and creating a thriving restaurant business.
Wow. This has been incredibly informative. I feel like I've gotten like a crash course in UAE restaurant taxes.
Awesome.
It's a lot to take in, but I feel like I'm starting to see the bigger picture.
That's great to hear.
Yes, a lot, but knowing there are experts out there who can help makes me feel much less intimidated.
Good. I'm glad.
Yeah. All right, well, let's take a quick break.
Okay.
And come back to wrap things up and...
That's good.
Maybe get some final words of wisdom from you.
Happy to share.
All right, we'll be right back after this.
See you soon.
Okay. Welcome back.
Yeah.
So we have covered a lot of ground so far.
We have.
From VAT and municipality taxes to the newer corporate income tax.
Right.
It's a lot to process.
It is.
So let's take a moment to kind of recap the essentials.
Yeah, I think it's really important to have that clear understanding, of the key takeaways. So remember, the UAE aims to be business friendly. And the absence of personal income tax is a big plus.
Definitely. But as we've learned, that doesn't mean that there aren't other taxes that apply specifically to running a restaurant.
Exactly. VAT is probably the most frequent one you'll encounter. It's that flat 5% on most of your sales. Whether it's dine-in, takeaway, catering, it all falls under VAT. And hitting that AED 375,000 annual revenue mark, that means mandatory registration.
And even if you're below that threshold, like we talked about, there might be benefits to voluntarily registering.
Absolutely. It really comes down to strategy. If you can reclaim enough VAT on your business expenses to offset the VAT that you collect, it could be a really smart financial move.
And not to mention that added credibility it might give you with investors or suppliers.
Absolutely. It shows that you're serious about, operating within the system.
Exactly.
Okay.
So speaking of strategy, we touched on some smart tax planning moves earlier.
We did.
What were some of the highlights there?
Well, claiming all eligible deductions is crucial. So anything that's directly related to your restaurant's operation, from ingredients and equipment to utilities, all of those expenses can really help reduce your tax liability.
So those meticulous records we talked about.
Very important.
Not just about staying organized.
It's
about being able to claim those deductions.
Absolutely. And we talked about some other interesting strategies too, like investing in staff training. Those costs can sometimes be written off, which can make a real difference to your bottom line.
Investing in my team can have tax benefits.
I like that.
Absolutely. What about that depreciation strategy?
Oh, yeah.
Can you remind me how that works?
Of course. So depreciation allows you to spread out the cost of a large asset. Like, let's say, a professional oven or a refrigerator over its useful lifespan. So instead of expensing the entire cost up front, you deduct a portion of it each year, which can then reduce your taxable income.
Okay, so it's like getting a little tax break each year.
Exactly.
As that equipment gets older.
Yeah.
Smart. Okay.
And then technology, we can't forget about that.
Right. You mentioned that.
Yeah.
It can play a big role in streamlining this whole tax process.
Absolutely. Good accounting software can be a game changer.
Okay.
Especially if it integrates with your POS system.
Right.
It can automate a lot of the tracking calculations, even VAT reporting, that really minimizes the risk of errors and frees up your time to focus on the things that you're passionate about.
Right. The important stuff. Okay.
Yeah.
So embracing technology is a win-win.
It is.
Less stress, fewer errors, more time to focus on the food.
Yeah.
Okay. What about municipality taxes?
Oh, yeah, those are important too.
Yeah.
Remember, they vary depending on the emirate where your restaurant is located.
Right.
So it's really important to research those specific fees in your chosen location early on. So you can factor those costs into your budget.
Right, because those cover things like health inspections, waste management infrastructure.
Yeah, all the things that are essential for running a restaurant smoothly.
And staying in compliance.
Exactly.
Yeah.
And speaking of compliance,
yeah,
let's not forget about that new corporate income tax.
Right.
It's still relatively new.
Yeah.
So staying up to date on any changes or updates is really key.
And understanding what's taxable income versus non-taxable income.
Very important.
Yeah.
It can get a bit nuanced, especially as your business grows and evolves.
Right.
And that's why I always recommend having that trusted tax advisor in your corner.
Yeah.
They can help you navigate those complexities and ensure that you're making the most of any tax planning opportunities.
And we talked about some other fees that might pop up depending on the specifics of your restaurant. Things like service charges, customs duties.
Especially if you're importing unique ingredients.
Right.
Those customs duties can add up quickly.
So proper documentation
Very important.
is essential.
Yeah. And having a reliable customs broker might be something to consider.
Okay.
If you're dealing with frequent imports.
Yeah, just to minimize that stress.
Yeah, minimize stress and potential delays.
Right, exactly.
It seems like organization and careful planning are just essential ingredients for success in the UAE restaurant scene.
Couldn't agree more.
Yeah.
You know, a solid understanding of the tax landscape.
Yeah.
Coupled with strategic planning.
Yeah.
And perhaps a little expert help can make all the difference.
Absolutely. All right. Well, let's move into the final part of our deep dive.
I'm good.
Where we'll leave you with some final thoughts. Yeah.
Insights to consider as you embark on this culinary adventure.
I'm excited.
Okay, so we're back for the final part of our deep dive.
Here we are.
Into UAE restaurant taxes. I have to say, even though it's a lot of information,
it is.
I feel a lot more prepared to tackle this whole thing.
That's great to hear.
Yeah. But, you know, something you said earlier really stuck with me.
Oh, yeah.
About how the UAE's tax landscape is constantly evolving.
It is. It's true.
So, you know, what's accurate today might change tomorrow.
Exactly.
So how do we stay on top of all that?
Well, subscribing to industry newsletters.
Okay.
Staying updated on announcements from the Federal Tax Authority. That's always helpful.
Okay.
But honestly, the most valuable thing you can do is establish a strong relationship with a reputable tax advisor who specializes in the restaurant industry in the UAE.
Someone who really understands the nuances.
Exactly. Someone who's going to keep you informed about any changes. Make sure you're always in compliance.
So I can focus on the food.
Exactly. Right? That's the goal.
Yeah. Think of it as an investment. In your peace of mind.
Makes sense.
Yeah.
So as I'm, dreaming about that grand opening.
Yeah.
Picturing, those happy diners enjoying my food. Staying tax savvy. Is really a key ingredient.
It is.
In my recipe for success.
Couldn't agree more. It's all part of building a thriving and sustainable business.
Well, this has been a fantastic deep dive.
It have.
I feel much more confident.
I'm glad.
About navigating this world.
Awesome.
Any final words of wisdom for our listeners?
It's a journey, not a sprint.
Okay.
Approach it strategically. Seek expert advice when you need it. And most importantly, don't let the tax side of things overshadow your passion.
Right.
For creating that truly exceptional dining experience.
That's great advice. Thank you so much for joining us.
It's been my pleasure.
I feel very inspired.
Good. And to everyone listening, thanks for joining us on the deep dive.
Yes, thank you.
Until next time, happy cooking.